Welcome. This is My Favorite Mortgage Podcast. I am Jaimie Booth, a licensed loan officer in Arizona and Texas. And you are listening to a newer podcast that gives buyers, sellers, and realtors a behind-the-curtain look at what it takes to get a transaction from start to finish. We like to bring on special guests to not only share their expertise, but also to provide some advice on getting you to become a homeowner. And with that, we have one of my own personal friends, my own financial advisor. We have Dominic Escamilla with us.
Nice to be here. Thanks.
Good
Thanks
morning.
for having me. Good morning.
Of course. Thanks so much for coming on. I know this is probably
Glad
out of your realm.
It's the first time I've done something like this, but I'm excited.
Okay.
Yeah, we'll see how it goes.
I won't bite. I promise.
All right.
I promise. So we like to kind of talk a little bit about, buyers' journeys because I do mortgages and this is my favorite mortgage. But there's something that, a lot of buyers don't even realize that they may have access to get them into a home sooner. Before we get into that, though, let's get to know Dominic a little bit.
Okay.
And this is a this or that type of.
Oh, okay.
Okay.
Good.
Just a
have
little
to
game.
Tell my story real quick or anything?
Just a little. No.
Oh,
I
good.
mean, if you want to.
No. I'd rather not.
Okay. All right. So this is just kind of like a this or that.
Okay.
And you could just, yes or no. Okay. Ready?
Sure.
Apple or Android?
Oh, Apple.
Yes.
Yeah, definitely. I like the blue background text.
Yeah. When it comes up green, it kind of makes your skin
But that
crawl.
one person in a group text that ruins it because they have an Android.
Mountain or beach?
Probably beach.
Beach?
Yeah.
Yeah. You went to Spain not too long ago, right?
Yeah, this past summer.
And I've been to Barcelona once and it was beautiful.
Oh, I love that place. One of my favorite places in the world.
When you go to places like that, do you start looking up real estate?
Well, I tend to stay in Airbnb, so yeah, I do end up looking at real estate.
You're like, what would it take for me and my family to move here?
Exactly. Well, Spain is kind of in the back of my mind, retirement place goal. So yeah, I was actually looking at some real estate in Spain. Mm-hmm.
It's funny. I don't know if they have like a, Spain Zillow kind of thing.
I don't know.
But yeah, Zillow, you need to get on that. Okay. Dog or cat?
Oh, God, I love them both. But right now I have a new puppy, so I'll say dog.
Oh, yeah?
Yeah.
Well, how old?
It's like, what is it, like 5 months? Yeah, about 5 months. He was born in August.
What kind of dog?
He's a kind of a mix, Yorkie and Poodle, Maltese, little fuzzy black dog.
Is he a rescue?
No. My niece and her husband had a couple dogs, and they had a little litter of 4. And,
kind of an accident.
So we had, actually, and we ended up with the only boy. So yeah.
Aww.
He's really cute.
What's his name?
His name is Jameson, like after the whiskey. Yeah. It's a long story, but he's funny. He's got a little underbite, and and we already have a black lab, and we have a black cat. So we have three pets. They're all jet black.
Oh, how funny!
Yeah. So
we had Andy on a few weeks ago, and we were laughing about how many different names pet owners end up calling their pets. So what's his nickname?
Let's call him Dummy.
Just Dummy. Oh, how nice.
I call him Little Dog too. Hey, Little Dog.
Little Dog.
So Little Dog or just Dummy because he's just not all that bright, but he's really funny. Yeah, he's hilarious.
That poor thing. So are you Tucson native?
Oh yeah, born and raised.
And you went to school at the U of A?
Went to school at the U of A. Before that, South Point High School.
Nice. Yeah, South Point's one of our local private Catholic schools.
Yeah. At the time, it was I believe it was the only. I think maybe Suffolk Hills. There was So there were 2 at the time. Mm-hmm. I graduated, way before the internet.
So
I'm
all
older
of
than
our
Google,
shenanigans.
as we're supposed to say now.
Yeah. There's no proof of our shenanigans.
Yeah, exactly. Some very embarrassing yearbook photos. My yearbooks are hidden away, and I don't like those Facebook groups of people taking shots out of the yearbook and putting them on Facebook. Not appreciated.
We're gonna have to go.
I guess people have mullets now too, though, so it's not embarrassing that
full
bad.
Circle.
Yeah, full circle bad hair.
Yeah. The mom jeans are back. Like,
oh God, yeah.
Why are we bringing this stuff
that
back?
ridiculous haircut that me and every other guy in the 80s had. Yeah.
So your task is to go find his yearbook.
No. There are too many South Point grads stay in Tucson, so there are too many people here that have access to those years. I won't say exactly what year in the 80s I graduated, so people.
Okay, so you'll make it challenging.
Oh, yeah.
Yeah. Okay. Well, again, thank you so much for coming on. We are in our second year of this podcast.
That's great. Congratulations.
And thank you. And when we're looking at home buyers, I wanted to share my own story because when I made a video about how I got into homeownership, and the caveat was I just did it, right? I didn't really know to worry about interest rates. I didn't know to worry about down payment. And I had my boss, which, I still think to this day, Alex Quinville, he's kept saying, you need to buy a house. You need to buy a house. And I was renting and I love my little place, but I had no idea where to start. And so he kind of said, borrow money from your 401k. And at the time I had worked for my company for 6-7 years, and I knew I had a 401k and I would get a statement, but I never really knew I could utilize that to buy a home. So fast forward, I got pre-approved and I used the money out of my 401k and I got an FHA loan.
Nice.
And so I didn't know that I could do that. I was always worried that I needed the 720 credit score or I needed 20% down, and I was able to buy a home. And I thank him because I didn't know that was possible.
Right.
And that's something that you do in life is your jobs as a financial advisor is to help, with their retirement. And 401k is one of the vehicles.
Right.
Can you share a little bit more about the different vehicles that help people with retirement?
Yeah. So as individuals, individual retirement account, that literally is that. There's no group retirement account for you and another person. Everything is individual. So your 401k is just yours. An IRA is just yours. A lot of people hear the term Roth and don't know what that means. A traditional IRA is pre-tax money. A Roth IRA is after-tax money. So that means the money you're putting in a Roth, you've already paid taxes on. It grows over your lifetime as you keep putting money in it. And in retirement, it's one of only two sources that you get tax-free income from. The only other one is cash value in a life insurance policy. If you use a permanent life insurance policy correctly, growing cash value in it, those are the only two areas you're going to be able to pull cash out of tax-free in retirement. So Roth IRAs are great tools. And sometimes your employer has a 401k that has a Roth option on it, and that's awesome because the limits are higher of what you can put in your Roth at work than what you can put in your Roth individually. And also the IRS has some limits on income wise. So if you make too much, they don't let you put money in a Roth. I forgot what see how these amounts change every year. So I think it's somewhere
so with loan amount.
Yeah, limits. I think it's like 135,000 as an individual and 190 as a couple. Once you surpass that, you can't put money in a Roth, either one of you. But at work, you can put your entire limit of what you're putting in your 401k in your Roth if they have that Roth option.
And then your income doesn't come into play?
No, your income doesn't come into play at all because
Nice.
It's not a percentage of your income; it's a total amount. So you can put whatever percentage of your income in a 401k. The limit, the dollar limit, if you're under 50, is $23,000 for 2024, and if you're over 50, there's a $7,000 catch-up, so it's $30,000. So if your employer,
so you're saying 50 years old.
Yeah, so if you're 50 years old, then you have that catch-up. So
Okay.
if you're under 50, you can put $23,000 in your 401k, either pre-tax or Roth, if your employer has a Roth option. And then if you're over 50, you can put a full $30,000 in your 401k.
So the limit plus your catch-up.
Your catch-up to $7,000.
And that changes every year.
That
I feel
changes
like.
every year, but the catch-up tends to be the same amount every
Okay.
year. It's always $7,000. So because last year it was like 22.5 or something. I think it goes up in about $500 increments, sometimes $1,000.
And that catch-up period is for people such as myself that didn't really even start retirement till like my 30s, right? And I feel like, I don't feel like I'm going to have enough.
Right. Well, I would say this before we go any further, just if you're employed and your employer offers a 401k,
right,
and you're not participating, change that today.
Okay.
Go and sign up for your 401k. Nobody is saving for you to retire. Nobody.
No.
The IRS wants you to save for your own retirement because
and that's why they
Social
give these
Security
tax
is not
benefits.
enough. Yeah.
Gotcha.
That's why you're allowed to lower your taxable income by putting money into a 401k.
So out of the three, which one is your favorite?
Well, that's a tough answer because, a 401k is my favorite because it's the one you can put the most money in. But no matter what, you want to be saving for yourself. So that's, bottom line. You want to save for yourself. A lot of people are self-employed, and if they don't have employees, they can do what's called a solo 401k, and that's really great for like real estate agents. It's huge.
Yeah. We taught a class on that with
we taught a class on that. That's real important to do. And getting back to the whole concept of nobody else is saving for you to retire but yourself. Right. It's important to participate in any of these. It's just how old are you and what your situation is. Where are you in life financially?
Anything will help.
So sometimes pre-tax is a lot better because you're trying to lower your taxable income. Sometimes it doesn't matter how much you're getting taxed. It matters that you're putting money away in a Roth so you can get more money
later
tax exempt in retirement. So that's why that question is difficult to answer because it's more of a very particular situation. You need to examine your own situation. But I would say if you're not saving in a 401k, if your employer doesn't offer a 401k, go up in an IRA or a Roth somewhere and start contributing because nobody is saving for your retirement.
Well, let me ask you this, and you may not know, but on average, so very average American, when they get to 65, what's a magic number that someone should have been saving?
Oh, that's tough. The most important thing in retirement is income. It's not assets. Okay. So you need to have a strategy as you're saving towards your income. So you need to have liquidity, you need to have wealth accumulation, and then you need to have lifetime income. So it's about a whole process of doing that. And there are all of us have one pension in common, and that's Social Security. Some of us, people a lot younger than me, it's really in question if it's even going to be there.
Right.
I'm of the mind that's always going to be there because they're not going to default on that, and that's a 5-hour conversation as to why that is how it is. But
it can't be your only thing.
It can't. Oh, absolutely can't be your only thing unless you want to live below poverty level, in retirement.
Yeah.
And sadly, a lot of people are banking on only that, or they're just treating retirement like it's so far out in the future it doesn't matter. And then all of a sudden they find themselves in their 50s and realizing retirement's within a decade, and they haven't started at all.
Right.
And then they realize, okay, well, I'm going to work until
I die.
I die, or until people just won't employ me anymore. And that's what people are facing too, that no one wants to hire you, when you're 74 years old.
Walmart will.
Yeah. Yeah,
Be
but that's a sad situation, and it used to be that we would live generations in the same home, and that's just not in all of Western society. That's not really happening anymore. You don't live 3 or 4 generations in the same household with aunts and uncles on the same property and all that stuff. That doesn't happen here. A lot of times that happens with immigrants. You'll see them come here from like India or so, and 4 or 5 families living in the same home, sharing all their resources.
Economical.
Economical. And then next thing you know, years later, there's a bunch of them are doctors, and they have, they're all millionaires. And
we're doing it wrong.
They do that, Well, they took care of one another. They acted like family. We're so individualistic. It's just, I'm going to go to school in another state and see my parents twice a year type thing.
Yeah. Well, I've heard of Roth IRAs, and it's. I'm so glad that you came on because my employer does offer that. Now I want to look differently. Yeah. And so when it comes to these limits, not just dollar amount, but you said it's 23,000.
It's 23,000
for this year.
Yeah, for this year, if you're under 50, that can go into your 401k, and that can go in pre-tax or after tax.
So could you split it?
Yeah, absolutely.
Okay.
Yeah.
So some in Roth, some in traditional.
And some people, and this is your own financial advisor, or you need to find out what's right for you. Do you need your taxable income lowered? Are you really close to a tax bracket and you want to get under that tax bracket? Your 401k is the best way to do that. So it's important to find out where you are. But getting back to the whole thing about getting a loan on your 401k, now this is another thing that's kind of out of your control to begin with, because your employer's 401k might not offer loans, okay? the
See,
larger
and I didn't know
yeah.
that. I thought that if you have a 401k, you had the option to withdraw for a home.
Right. Now there are hardship withdrawals,
Okay.
and in some cases a first-time home buyer can count as a hardship withdrawal. So that would be the only caveat, but it's not 100% of the time. Now, if you're an employer and you're providing a 401k, you can have it written to where you're allowing for residential loans for your participants to be able to pull money out of their 401k. Now, the IRS doesn't want you pulling any money out of your 401k at all until you retire. That's why there's a big 10% penalty if you take early withdrawals.
Yeah.
Plus, you're still paying taxes on it. Because if you retire with $2 million in your 401k and you're looking at, wow, I have $2 million in my 401k, that's not all your money. You haven't paid taxes on it yet. The IRS is still going to get their share. But
which is like 25% or something crazy.
Well, yeah, it just depends on your tax bracket at the time when you're pulling it out. But you're that's another thing. You figure, okay, well, I'll be retired. I won't have income, a W-2 income, so my tax bracket's probably going to be lower. But then you got to figure, okay, well, are the tax brackets going to be the same 30 years from now
20 years,
when I retire, so who knows? So it's a tough question to ask yourself, and you just have to get on a path and kind of commit to it and stay on it.
Right.
Yeah.
So I've heard the rumor is like $2 million is a good amount of money.
Yeah.
And that's why I'm like, I'm not doing enough.
Yeah. That's it's a nice round number to come up with, but it's also tough to say, because if you just I have $2 million in assets, I'm retiring at 65. Okay, how much do you get to spend every year? It used to be this 4% thing, but now they're saying maybe 2%. You can spend your money too fast. Inflation can wreck you, like it is.
Yes,
a lot of people
happening.
now.
Yeah.
I mean, right now, basically the entire country's got a 25% pay cut. And it's called inflation.
Jeez.
And that's, everything costs more. You'll go to the grocery store and you get 2 bags of groceries and spend $86. And you're going, what, is there gold in these bags? What did I just buy?
I was grocery shopping over the weekend, and a frozen pizza was $9.99.
$9.99 for frozen pizza. Yeah.
I'm like, this is ridiculous.
It hurts my heart that you're buying frozen pizza. Talking to a chef here.
You're right. I forgot. He's a master chef, and
no. Let's not go master chef.
Well, more than me, but there's some days where I work late.
Glorified foodie.
Yeah. Just throw that frozen pizza in there. Now it's $10, so forget it. I'm not going to do that.
Yeah. No, but it's tough to just say, and anytime anybody's just going to give you a blanket number or like the one size fits all financial product.
Right.
Question it, because it's a lot more complicated than that. Because you can spend your money too fast. There's interest rate risk. There's inflation risks. There's the risk of living very long life. So if you live a really long life,
you could outlive your money.
And you could outlive your money, even if it's $2 million. But if you set yourself up where you're getting income every month for the rest of your life, no matter what.
That's the key.
That's the key. So, and a lot of companies don't offer pensions anymore. We have Social Security, but that's small. But there are financial products out there that you can actually purchase that do set that up for you. You do have money coming in for the rest of your life.
Yeah.
Yeah.
And I think that when we did my snapshot, I think mine was the life insurance.
Yeah.
Where it's got a cash value.
Yeah, and then you do have some other things set up too. So you have some lifetime income set up. So, but it's a real important thing to do, because you want to. It's kind of like the whole theory of driving around with a half a tank of gas in perpetuity. You'll never run out. Or half a charge. You could say now if you have a Tesla. But so that's it's. So I would love it for everybody to be able to retire with $2 million. That'd be awesome. But but you maybe you don't get to that point, but you're setting yourself up where you're going to have your monthly income needs covered every month with lifetime income. Then you're going to have some peace of mind there, no matter how long you live.
Nice, good. So, thank you again, Dominic, for coming on. I know I'm in good hands when I look at my retirement, and I think there's times, I think I'll even go like a year I don't look, and, it just, life gets busy. And then all of a sudden I'll open up a statement and I'm like, ooh, I did really good last year.
Yeah.
Nice.
Yeah. I would suggest, if you're not close to your 60s yet, don't don't drive yourself crazy by looking at your 401k statements, looking at your IRA. If you have an individual stock trade account that you do, of course that's different. If you're a day trader, all that stuff. But if you're just saving and you have a long time horizon, the stock market is like a kid walking up a hill. Okay, the hill is slowly a grade up all the time, and the yo-yo is in the kid's hand, and it's going up and down and up and down and up. Well, the daily stock market is that yo-yo, but the kid is always walking up the hill. That's how you have to look at the stock market.
Yeah.
The stock market has only been lower at the end of a decade than it was at the beginning of a decade once in our history, and that was the 1920s.
And that was the Great Depression.
And that was the Great Depression. Other than that, it has always been higher at the end of the decade than it was at the beginning. So that's a steady increase. The market has always grown. So,
but you're right. I don't look. I don't worry about it. I still am in my working
years.
Crazy doing that. Right.
Or do the worst. You get out when it's gone down, and you panic and you get out and you sell low, which is.
And you look at and you're like, oh, I didn't make as much, or I was at a loss. But it's so extremely important for Americans to really understand that there's, like you said, there's no one saving for you. You have to make the initiative and do it. So if any of you listeners want to get in touch with Dominic Escamilla, financial advisor at Country Financial, please feel free to reach out to us. You can find us on all major platforms. You can message us on Facebook or Instagram, and I will definitely connect you guys. Because not only is he a fantastic financial advisor and someone I highly recommend, he's also one of the most charitable, generous people I've ever met. And I wanted to just kind of touch on two of the things that I know personally that you are involved in is Make-A-Wish. And the other one, we call it the Blue Blazers.
Oh, yeah.
Which is Arizonable.
Yeah.
Right. So tell us, to not take up too much time, but Make-A-Wish, for those who didn't know, started.
Yeah, Make-A-Wish started in Arizona. It's our charity. We should all be proud of it. Started in Phoenix in 1980. It started with 7 people, $37.76 between them, with the mom of the original Wish kid. And now it's in over 69 countries, and we've granted 450,000 wishes. I've been involved for 10 years as a fundraiser locally for Make-A-Wish. Everything we raise for Make-A-Wish Arizona and the Tucson area, it stays in Southern Arizona.
For our Wish kids.
Yeah, for our Wish kids.
Yeah. And we recently had a breakfast to,
that was hugely successful. A community breakfast. We'll have another one next November. Yeah, so if anybody emails you or tells you about it, attend it. It was great. It was exactly 1 hour. We got everybody in and out, let them know about Make-A-Wish, and had a Wish dad tell a story of his 2 Wish kids. He had 2 kids.
Yes.
And the best thing, I know we're short on time, but the best thing about Make-A-Wish now is that the majority of the kids are outliving their diagnoses, and they're making it. And so it used to be a last wish, but now it's a lasting wish.
Oh, I love that.
And it's because of medical technology growth and also the hope that it provides these kids. And it's kids from 3 years old all the way to 18. And it's for kids facing a life-threatening diagnoses. That's so if you know anybody like that, reach out to us, Make-A-Wish Arizona, just find us online, and recommend that child, that teenager, for Make-A-Wish, because it's a life-changing experience for them. Yeah. It's really great. I've been blessed with healthy kids, thank God, and that's why I'm involved with Make-A-Wish, because I haven't gone through what these parents go through. So
I remember the one young lady, she's an adult now, but she talked about her wish, and the mom got to go with her on a trip. Yeah. And she's now like a college student, and she's just going to do something great in this world. You could feel it. Yeah. And
she was the one that got to go to a Disney movie being filmed.
Yes.
Yeah, that was a really neat story, because she's around the same age as my daughter, and my daughter was a big fan of that movie. And there was a particular actor, Cameron Boyce was his name, and he passed away. And this girl got to meet him and everything, and she was really excited about that. And he died at like 20 years old or something. I forgot what he died from, but so this girl, this Wish kid, got to meet him and get photos with him and everything. Yeah. So it's
some of the Wish stories too, I feel like the children, when they're making the wish, are so unselfish.
Oh yeah.
They want their wish is more, what can I do for my family? What can I do for my mom? What can I do? I remember the one young lady had her mom's backyard transformed into like the Zen garden. Yeah. Like, even though it was her wish, She wanted to pass it on.
Right.
It was incredible.
Well, so usually kids want to go somewhere. COVID really messed that up. They want to meet someone. COVID really messed that up. They want to be somewhere, be something, like be a police officer, be a fireman. Those are the first two wishes actually ever. But now they want to give.
Yeah.
There was a gal that spent her whole childhood in the children's hospital at TMC, and when she got her wish, I think she was about 17, she just did a shopping spree for the children's ward there and just filled it up with iPads and other video game stuff and toys, and that was her wish to do that.
There
and
was
it
selfishness.
Yeah, it puts a lump in your throat immediately.
Oh yeah. It was an emotional breakfast.
Yeah.
So Make-A-Wish Foundation, for those who didn't know, nonprofit charity. They do some amazing work, and it was started here in Arizona. So if you want to know more information on that, please feel free to reach us at myfavemortgage@gmail.com. You can message us on all platforms, Facebook, Instagram, TikTok. And if anyone has any questions on maybe just even having their own old retirement, old 401ks kind of just reviewed.
It's always great to have a review, to have a new set of eyes on it.
Yeah.
Just or if you don't have a plan at all, a financial plan, or think you don't need one, or thinks that's for rich people. No, that's for everybody. If you just can't go. Most people spend more time planning their vacations than they do their own retirement.
And if you start early, like in your 20s,
you're so ahead of the game. It's not even funny.
You don't ever have that catch up, and you could do it for small amounts that are so just not impactful in your day-to-day finances.
It's so much more important than your cell phone, and you pay so much more for your cell phone than you do putting in money in your retirement account. Yeah. And if you just treated your own retirement as importantly as you treat your cell phone, you'll be set by the time you're in your 50s.
You could retire early, guys.
Yeah.
And home ownership plays an important part in that.
Part of it. Yeah.
So again, I am Jaimie Booth. I am here to help you for all your buying and refinancing needs, from the first house to the last house, everything in between. Thank you again to Dominic Escamilla for joining us on your very first podcast.
Yeah, hope to do it again.
And we will have you on definitely again. And please reach out. We'll see you next time. Bye-bye.